Hey traders, Raghee here, and this is your Simpler Futures review video for the last day of May, the 31st. And you're actually looking at the brand new members home section. Actually, this is the gold view. I'm super stoked because this just went live today. This is the gold view. So obviously you have your chat room login available here, as well as the chat room archive. If you are a silver member, you will get all the different menu items you're seeing here, minus chat room archive and minus the chat room login. But Elliott Wave Dispatch, the Learning Center, which we're populating, special reports like COTs and non-farm payrolls and different events that I feel could, merit a good one-page, simple, demystifying special report. Currency Corner. This is where, by the way, my Simpler Forex is basically going to be housed. So those of you that are watching this that are currently or interested in becoming Simpler Forex members, basically it's all going to get wrapped up into Simpler Futures, and the FX Currency Corner is going to be your new home. Everybody gets access to this, by the way. And then the Daily Digest, which is not just a newsletter, but we're going to have summaries of what went on in the chat room, watch lists, setups, as well as my spreadsheet. My personal spreadsheet of not just FX trades here in the Currency Corner, but my futures trades here in the Daily Digest. So lots of cool stuff to come. I just got my hands on this, so yeah, I'm pretty excited. But let's get to the markets, shall we? All right. So taking a look at what happened, the Dow had a very interesting about face. We're still short the Dow, and it's interesting in that the way in which we broke 21,000, it looked like we were well on our way to the optional 905 and the 805 entry, but the market had other ideas. We bottomed out at 929. This is still, even though it's just grinding away up here, this is still a valid trade, and it's a valid short. It's my smallest of the 4 total that we put on from the exact same exhaustion level of 20,995. So many of you are already very familiar with this. If you're not, it's a 20,995 short sell with price objectives, initial price objectives at 20,905 and or 20,805. And that's really all I have to say about the Dow. You guys know what I've been doing. If you've caught any of the recent review videos, the free videos, you know exactly where I'm positioned. Speaking of waiting for a market to follow through to the downside, I have another position here in the 30-year. And I had my doubts about whether or not we'd get that rollover gap. Here's 2 plays. So a lot of traders are wondering, Rog, can we get long in anticipation of the rollover gap? And as long as you stay nimble, which means taking advantage of the 60, 30, 15, or 5-minute time frames, that's fine. What I'm really doing is I'm viewing that area between 153 and 154 as an exhaustive level. But those of you that are feeling more nimble and playing that rollover gap zone, to me, it's not a trade on the daily. To me, it's much more a trade that you would take on the intraday, probably the 60. That's been a really nice uptrend there. Know your time frame. A lot of times people don't look at time frames as part of the strategy. They just kind of look at the fact that, I'm a certain kind of trader. I like looking for certain kinds of markets, and I like trading the fill in the blank time frame. And they squeeze that time frame to really become everything to them. They're squeezing that time frame to become the end-all be-all for every trade that they're going to take. And the truth of the matter is, different time frames can be in different market trends. And if the market trend is what you're using to determine what your strategy is going to be, what indicators you're going to use, then you can't force a single time frame to do that. So, indicators are also part of the market trend analysis. I'm not going to use a trending indicator in a choppy market, which is what this 30-year is right now. It is a choppy market, and I am looking for signs of this market being overbought, which with a 97 reading on my 21-period stochastic, that would qualify, okay? All right, what else do we have going on? Well, Euro-US continues to be one of our plays. I'm not a US dollar bear. In the chat room, we talked quite a bit about your watch lists. And I think this is an important point, and I'm going to leave you with this in the review video. The watch list that you would have for Euro buys, which right now for me are Euro US and Euro Aussie and even Euro Yen. Those are probably actually 1, 2, and 3 my favorites, I would say. My watch list for Euro buys is very different than my watch list for a potential Euro short. This brings us to Euro pound. And this brings us to the elections that are coming up out of the UK. One of the things that we've been seeing that's been creating a lot of volatility, whether that be weakness in the pound sterling or strength, has been when every one of these polls comes out and shakes the market up, because one of the fears that the market has, not that it's rooting for a side, but it's rooting for stability. Remember, the market always wants stability. It doesn't matter whose side it is, it's stability. And the side that creates instability is going to create typically risk aversion, and the side that creates, or the story that creates stability is going to create that, well, in the case of the pound, more strength. So when it looks like the Tories, the Conservatives in the UK, are slipping to single-digit leads, and that they may not win the majority, that they may not have a landslide victory and a mandate, you know, this is where the market gets concerned and sells the pound off. Now, do I think the Conservatives are going to win? Do I think some of these newfangled polls that are coming out of the UK are probably way off mark? And do I think that the Euro pound is arguably overbought? Yeah, if I was going to buy pound, my preference would be pound buys for the sake of a pound buy would be pound Aussie. Likely also pound US. Okay, which we have been long in, and this has been a great trade, not only from the 128 handle, but more recently as yesterday, from 27.85. But if I wanted to short the euro, I would look at Euro pound. So this is a concept of a driver. So what that means is when you look at a currency pair, and you could trade this on the future side of things or the spot, when you look at a currency pair, you have to separate each individual currency. You know, we have euro and pound, and you ask yourself, am I interested in euro pound because I want to buy or sell the euro, or because I want to buy or sell the pound? You should answer this question. One of these currencies should really be the reason that you're interested in this pair. And then you can ask yourself, well, if I am interested in selling euro, there aren't many pockets of opportunity for that. This is one of them, especially as we climb up to this area here around 87.80. Okay. This is an interesting euro short. But if I'm looking for pound buys, I would not look at this pair, and not now. I look at pound Aussie, I'd look at pound US, I might even look at pound yen. Those would be predominantly the places that I would look to wait for some sort of pound buy. Right now, pound Aussie and pound US are where most of my focus is because the trend is intact. Okay. So these are some of the stories that are out there. Kind of an interesting reaction, by the way, to the data this morning. Let me take you on over there real quick, and I'll follow up on a lot of these setups in the premium video. But I want to make sure in this review video, by no means, I actually don't like calling this the free video, because if any one of my members actually watch this video, I would be proud to share it with them. You know, I just happen to be sharing this with all of you, but, you know, I don't even like calling it the free video. It's a review of what I've been watching today. All right, so, you know, something to think about. When we saw, let's go to the calendar for today. When we saw today's calendar and we got the Chicago PMI, very interesting. This was a miss earlier today. I don't know how many of you knew that. This was a miss earlier today. 97 minutes after the release. This was a 55.2, I believe, release, and it was actually 59.4. 97 minutes later, something smells here. Nonetheless, there you go, 55.2, and then it ends up being a 50. I don't even have words. You know, as if trading wasn't hard enough, we have to deal with fake news and fake data. I don't know. I'll leave you to ponder that. I'll see you in the next video.